Today is December 19th, and this is the ADM Investor Services Monday Morning Market Kickoff video. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, ADMIS's Vice President of Grain Research, and Alan Bush, the Senior Financial Economist at ADMIS. Steve, let's start this morning with a question about renewable fuels. There's been some announcements for the new administration head of the EPA. Do you think this will change U.S. policy, and what is the impact on corn and soy oil prices?
Well, I think first of all, the person that was announced is not a friend of renewable fuels. That's known. Secondly, when we talk to people that should be in the know, the new president's going to make the decision on mandates. And so he's pro-ethanol at this time, so we don't think it's going to make big changes at this time.
The soybeans have actually backed off from recent highs. Is this trend changing, and if so, why?
Well, I think a lot of people have been trying to pick a top in beans for the last month or a month and a half, and they've been losing money trying to do it. And up until now, it's been a demand-led market. And now with the rains in Argentina, we're starting to trade a little bit more supply with too much supply. One group came out last week and said that soybean carryout worldwide is going to go up from the USDA's number and still be high next year. And they also increased U.S. Soybean acres for next year in place of corn and wheat. So I think it's time to put a top in the market. And I think that if you're a trader, there's a lot of risk in that. But buying puts might be a good thing to do.
Yeah, another private grain analysis group estimated that farmers will reduce corn and wheat acres in 2017 in favor of beans. Funds are long beans and short corn and wheat. Do you think this will trigger some liquidation on those positions?
I think that in the beans it should. They should take out their long positions. Right now we still have too much corn and wheat for us to put a bottom in those marketplaces. But as we get closer to the spring, it might see some liquidation of the short positions going into next year's weather.
There's not been much in the news regarding wheat. The market is a little firmer. Weekend U.S. temperatures were colder than normal. Did this hurt the 2017 U.S. winter wheat crop?
In making phone calls this morning, everyone's saying the same thing. It was cold, but it's hard to kill a crop in December, and so there's not expected to be widespread damage. It's going to be dry down there, so we have to kind of watch that. But I wouldn't buy wheat now because it was cold over the weekend.
Geographically, Steve, where exactly is that winter wheat grown here in the United States?
Well, there's two crops. There's the hard red winter wheat that is kind of a bread type crop that's grown in Kansas, Nebraska, Oklahoma, and Texas. That's the area that probably got the coldest. And the other is the soft red that we use for crackers and cookies and things like that, and that's grown in the Delta and the southern part of the U.S. Midwest. So there's a reason why we grow wheat in Kansas. It's a hardy weed, and it can handle a lot of things, and so I think it'll be okay.
Alan, the stock market held up quite well in spite of the hawkish tone of the FOMC meeting last week. Any change in their prognosis for the stocks?
No, just the rate increase was widely anticipated. And in fact, we had some negative news in a sense that the Fed predicted that there would be more rate increases down the road. And yet stock indices held up relatively well. So our view is that rates are not high enough and will probably not become high enough next year to actually reverse this bull market. So nothing has changed. The long-term outlook for the indices is still higher.
Yeah, as was highly anticipated, the FOMC raised the Fed fund rate by 25 basis points last week.
Right.
Why did the dollar rally as much as it did when the rate increase was directly in line with expectations?
Okay, the reason is that the Fed was very aggressive in their predictions that they could raise rates at least 3 times next year. They talked about another 3 rate increases in 2018, followed by another 3 in 2019. So the hawkish commentary and hawkish rhetoric suggests that rates will be increasing substantially, and that was the important part that caused the dollar index to advance.
Is it normal for the Fed to make a statement out like that and go out 2-3 years in advance talking about rate increases? I mean, isn't that a little premature? I mean, I'm thinking of watch the economy rather than talk about rate increases in 2018 and 19.
I think it's very premature to go out that far. In fact, I would only expect 1 to 2 rate increases next year with what we know, and maybe 1 to 2 in the following year. So you're absolutely right. To predict 9 rate increases over the next 3 years, I think is asking a lot. I wouldn't predict that many.
Last Friday, housing starts plummeted almost 19%. This would normally be a bullish influence for the interest rate futures. Why did the March T-bond futures close substantially lower?
The short answer is I think that they are in a bear market. We very much ignored some bullish news in any market. In fact, a rule of thumb is any market that does not rally on bullish news should be viewed as a sign of weakness for that market, and that rule comes very much into play with the bonds very much underperforming the news on Friday. So there is some recovery today. I'm looking at the 149 and a half, 150 area in the March bonds as a selling area. So the trend in the bonds is still lower, and the fact that bonds could not rally on bullish news, once again, is a sign of weakness for that market.
As we move into the final days of 2016, is there anything that traders should be looking for? I mean, what would be considered normal market action at this time of year?
Well, I would think there's a lot of evening up between now and the end of the year. Some people are thinking that stocks or stock index will hold very well, not willing to take profits this year on the idea that Trump may lower taxes on capital gains next year. So I would expect the indices between now and the end of the year to hold up very well. Maybe a little profit taking late or early next year, but I think that'll be minimal.
Our consultant Hightower is short beans and corn. And I think that it's a weather market for the soybean market in South America. Without a weather problem, soybean prices should go lower. It's usually a quiet time as people take vacation or takes time off. But we are a weather market in South America, and I think that number one, if it's okay, we'll go down. Number two, obviously, if it turns drier, we'll be right back up.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like information about the brokerage services offered at ADMIS or would like to open a trading account, please visit www.admis.com.